Hey, what's going on, everyone? Matthew from therighttrader.com back again with another video. Today we're going to be talking about tech stocks and the recent jump in stocks like Snapchat, Twitter, and of course some of the bigger tech stocks like Apple and Amazon. Now, tech stocks, some of them are pretty highly valued right now, and then we've got some lower valued, smaller cap, tech stocks around $30 billion market cap or so. Tech stocks like Snapchat and Twitter, which I feel provide some pretty nice value investing opportunities, and that's something that I wanted to talk about in more detail in this video. So you guys usually like when I do these more update type videos, so make sure to leave a like and support the channel. Also subscribe if you haven't already. What caused this jump today in the tech industry was the earnings release from Snapchat, which showed a big amount of average users, and that really kind of spiked a interest back into tech stocks, with a lot of people kind of seeing that maybe they could be benefiting from the whole situation, from everybody being at home, right? In fact, if we look at the S&P 500 overview, you'll see bright green is the technology area, and then in a second time, application software, semiconductors, and so on. But overall, right, the tech industry has seen a very strong jump today. One of the biggest jumps actually in the market. So we're taking a little bit of a closer look on that in this video, and kind of seeing which ones are potentially good investments. Once again, just my personal opinion, not financial advice, and what I see them doing in the next couple months and even beyond that, right? Because for some of these tech stocks that are still at some relatively low valuations, like Snapchat and Twitter, like I said, I do feel like the value opportunity is there long term, right? When you look at Snapchat, 24 billion, obviously it had a very big jump today, so that's something I wanted to talk about. But still, $25 billion market cap is very small if you compare it to Facebook and so forth. So it does have a lot of room to grow. And in fact, if we think about the increase that it had today, although this is a bit much, right, I think it would be nice if it pulled back a little bit, because this is a very big increase in just a day, and I don't want it to go up too fast. I'm also trying to get some of these shares while they're still cheap. Now, you have to keep in mind that if we look at the chart of Snapchat, we're actually bouncing back against the uptrend line. So that is not necessarily a bad or a good thing. It means that it's going to be a little bit harder to move higher right now. But what it did create is we now have a new uptrend line. So what we're actually seeing here is a pretty big and wide ranging channel formation, which we could bounce up and down in between this channel here as we move forward in time. And what's interesting with this is, since it's such a wide channel, which is somewhat rare, we really could have some ups and downs, but overall we should be moving higher, and that's the key thing here, right? And this is a pattern that could probably be replicated on a lot of other tech stocks. And if we go ahead and take a look at some of these tech stocks, let me cover the first, bigger ones. I think that there are some interesting opportunities even amongst the bigger ones, right? Amazon is obviously going to do good in the coming months. Apple, while they, initially took a pretty big hit, they are at some cheaper prices than before, so that is something to consider. Then you go towards tech stocks like Facebook, etc. The thing is, for a lot of the bigger tech stocks, I'm personally not too interested in them, just based off the valuation perspective, right? I'm not really trying to get into stocks that are already worth $1 trillion. I just don't feel like there's that much room left for growth in the short to medium term. So I'd rather go in tech stocks like Shopify, Snapchat, Twitter, that have those better valuations and more room for growth. Also, some of the semiconductor stocks that are pretty interesting. As far as the bigger stocks, I do like Tencent. That is one of the bigger tech stocks out there. I'm not really getting into too many of the streaming stocks like Netflix and Disney. Between the two, though, I'd rather go with Disney. And if we move down this list here, we're going to start heading into, like I said, some of these smaller tech companies. And by smaller, they're obviously multi-billion-dollar companies, but relative to those trillion-dollar ones, they still have that room to move up into the multi-hundred-billion-dollar market caps. And that could be, 100, 200, 300, 400, 500% plus increases on already pretty big, well-established companies. So that's more what I'm looking for, right? Like I said, Shopify, I've been talking about this one a lot in the last few days. If we go ahead and take a look at the chart, it's been doing terrific. Now, one thing that I don't like about Shopify stock is it's currently at all-time highs. And I do have a little bit of a hard time rationalizing getting into a stock right now with the current economic conditions and it being at all-time highs. You have to keep in mind that e-commerce platforms, which Shopify obviously is, have seen tremendous increase in users in the last few weeks, right? They've actually reported near Black Friday levels of shopping. So that is very interesting, and that explains why it's been continuously going up, right? Especially even in the last few weeks. But, you know, is this the time to get into a stock while it's an all-time high? I personally would rather go into something like Twitter, where it's not at an all-time high and it can reach that all-time high again, than Shopify, where it's already at an all-time high. But I've talked about Shopify before, and I think the valuation here, $73 billion, is still extremely cheap for what it is. So it's just a bit of a trade-off. I can't answer that question for you. It's just something to think about, but it's just a trade-off of a good company at a good valuation, but at its all-time highs, or would you rather, hold off on that, wait for a pullback potentially? But you have to keep in mind with some of these tech stocks, right? We're seeing maybe they're not going to get as much of a pullback as we might have expected. So we may have to take the opportunities as they come. Moving back to the list here, we're going to talk about some of the semiconductor stocks, things like Nvidia, AMD, graphics cards producers, etc. How are those ones doing, and which ones do I like? By the way, all the gaming companies I like. That includes Sony, even Nintendo, all the video game software companies, right? Take-Two Interactive, Activision. I all think those are going to do really good in the coming months. So I like all of those. Sony, very interesting with the PS5 release. I think they're pretty well set up right now. Now, AMD, let's take a look at the chart. I'm sure a lot of you are wondering what I think about AMD, so let's go ahead and take a look at that one. And Nvidia, for example, is very close to its all-time highs again, I believe, so we'll take a look at that in just a second. But as far as AMD is concerned, what we're going to see here is a jump back above $50. So if we look at the stock, AMD is literally just about to be pushing new all-time highs again. And like I said, that is just a bit of a concern to me, where right now I'd really rather not be investing in stocks at an all-time high, even if they're good companies, just based on the fact that the economy is still uncertain and really anything can happen right now. So that's just my my issue with the story with all-time highs, right? Not that the stocks might not do well, they might continue to do well, they might make new all-time highs, but it's just personally, I'd rather go for the valuation buys, right? And Nvidia, very similar story as well. Here we got a sort of cup and handle U-shaped bounce, and looks like we could be pushing new all-time highs on this one as well, moving even above $300. So that may be surprising to some, right? I understand how that can be surprising to some, but you got to look at the bigger picture here and think some of these tech companies are actually benefiting from the situation, or making more money potentially than before, and at the very least will be able to weather the storm much better than sort of brick and mortar type companies that are getting hit really hard by the whole economic situation, right? So that is sort of what I'm seeing here as far as the tech industry is concerned. But overall, there's a lot of stock that I like in there, right? Like I said, Snapchat, Twitter, and Shopify probably being my top three. And then, the gaming companies, I don't really think you can go wrong with those right now. But definitely like Shopify, Twitter, and Snapchat, not solely, but in large part due to their valuation, right? Their cheaper valuation. It's a big deal. Micron Technology is also one of these semiconductor stocks that I like, and I feel like is maybe a little bit better of a buy than the stocks that I mentioned, Nvidia and AMD, right? Semiconductor stocks. I think Micron is a little bit better placed just because of the fact that it is not at its 52-week high. So you're getting it at a little bit of a lower price here on Micron, which I actually like, and I think it leaves a little bit more opportunity for growth. Also wanted to do a little bit of a update on Twitter. This one got a bit of a sympathy buy because of the Snapchat earnings, and it's probably going to do well like Netflix did, right, with some increase in users. So it got a 10% jump today. And really, once again, Twitter, the nice thing with this one is obviously it's very active right now with everything that's going on, and they're in a very good position to benefit from that. Also, the stock itself is not at all-time highs, right? We're give or take about 35% off from, our more recent highs. And as far as our absolute all-time high, right, that was $69. That was a while back ago. But even getting back to $45, which seems pretty likely in my opinion, you're getting in at a discount here, which I like. I don't really see Twitter falling basically at all here, right? I don't really see how it could have anything to lose in the current situation. I feel like it has everything to gain from the current situation. So definitely a tech stock that I like. If we just give a little quick look at the more detailed chart here, just to see what's going on, see what pattern it's in. Now, excuse the very messy chart, but the basic idea is that we're back above the $25 support level, and we've now begun slightly uptrending again. Now we have quite a bit of resistance ahead to get back to $45, and we could see a lot of messiness and a lot of up and down in the coming weeks to months. But the fact of the matter remains that we're back above $25, and I think it's pretty unlikely that we fall below that. So just based off that alone, I would feel comfortable investing, and I will likely pick up some shares in the coming days and weeks. With that being said, hopefully you got a better idea of my view on tech stocks, how I think they're going to weather this storm and potentially even benefit from it. My three favorites being Shopify, Snapchat, and Twitter for valuation purposes. And yeah, thank you so much for watching. Make sure to follow me on Twitter. I've been active on there again, posting a lot of information. I talked about the Snapchat and Netflix earnings. And also make sure to check out my technical analysis master course. It's less than $20, comes with a 30-day money-back guarantee, so you can try it risk-free. You can find the link to my Twitter and the course in the description of this video. Thank you so much for watching, everyone. Have a great day. Stay safe.